Stocks closed mixed and on Wall Street, Nasdaq plunges 3% to record the worst day in over a month as DeepSeek fears spark of tech rout while the Dow Jones ends higher. Most Asian markets are closed for the Lunar New Year holiday today. Oil prices slip pressured by Trump administration tariff talk. Weak PMI data from China also weighed on prices. Gold prices retreat ahead of the Fed's meeting, which starts later today. Tata Steel reports a profit in Q3 versus expectation of a loss. Europe business loss narrows while debt reduction continues. Coal India earnings beat expectations on better realization and improved operating leverage. In key earnings today, Bajaj Auto is expected to report a subdued quarter, while Cipla profit is seen rising by 11%. Also, watch out for numbers from TVS Motors and Colgate. RBI announces measures to boost liquidity just days after top bankers raised an alarm on liquidity hitting the lowest level in over a decade. RBI announces 60,000 crore rupees infusion through bond auction in 3 tranches. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. I'm coming in from the Mumbai studios. A quick look at what the Asian markets are doing this morning. Most of the markets are shut today. So when you're looking at it, we have the China markets that shut, Taiwan is shut, South Korea is shut, Hong Kong also shut, and Singapore is trading a half day because of the Chinese New Year. So we're keeping an eye out on all of those when they open up and trade. But today we have ASX 200, which is trading a bit muted, up 0.1%, while Japan's Nikkei is trading down 0.6% in trade. Handover coming in from the US is also not that exciting. So Nifty implied open indicating a 70-point uptick as of now is what we're watching out for. But do not forget, yesterday we had seen a sharp fall coming in the markets. As of now, almost around a 65 points uptick that we're seeing coming in for the Indian markets. That's the Nifty implied open that we're seeing coming in. But like I was saying, what happened in the US market, that Wall Street ended largely lower with the tech-heavy Nasdaq Composite losing more than 3%, while the S&P 500 slid about 1.5%, and the Dow Jones that outperformed, gaining 0.63% in trade. And concerns over DeepSeek came to a head on Monday. A Chinese startup last month that unveiled a free open source large language model that it says took less than $6 million to build. The development spurred worries around big tech's investments into the AI technology and AI world. Now, DeepSeek surpassed rival OpenAI on Monday to become the most downloaded free app in the US. Now, moving on, Starbucks and Boeing are due to report their numbers today. A slate of magnificent 7 companies will report in the coming days, like Meta, Platform, Microsoft, Tesla, as well as Apple will be reporting their earnings later this week. Federal Reserve will also kick off its 2-day policy meeting that will start later on today. Now, let's get some expert opinion that is also coming in and listening to Roger Ferguson, the former Federal Reserve Vice Chairman, who's talking about the impact of AI on Fed's interest rate decision and what it will look like. Listen to what he had to say. Okay, we'll come back later on to that, but let's move on. And actually, that was a global overnight action that we saw coming in, because US markets clearly saw a bit of a pressure coming in. But how is all this actually going to be impacting our Indian markets in terms of the cues? We have our research team who's joining in with us, standing by to tell us how the trade setup is going to be looking like, which are the important stocks to watch out for, as well as the cues in the world of F&O. Good morning, guys. Thank you so much for joining in with us. Vivek, let me start up with you. What is the trade setup looking like? Yesterday, it was a sea of red for the Indian markets. Today, what are we expecting?
Good morning, Mini. Like you rightly mentioned, so much uncertainty, in terms of the handover as well. Yesterday, US markets, Dow Jones was the only market that managed to end in the green. But like we've been highlighting all throughout, the emergence of DeepSeek has actually ensured that quite a lot of stocks across the technology universe have seen quite a bit of a sell-off. NVIDIA was the one that bore the majority of the selling pressure, seeing the biggest single day drop ever for any stock. Along with that, quite a lot of data center related stocks, stocks that supply power to data centers. All of these stocks across US as well as Europe saw significant selling pressure. In fact, Siemens in Europe saw almost a 20% downtick yesterday. Along with that, on the back of that, rather, you saw the Nasdaq seeing quite a bit of a sharp decline. It was also a significant risk-off sentiment across the commodity markets as well. Crude oil prices yesterday cooled off almost 2%. Now, coming to the Indian markets, like you mentioned yesterday, red all across the screen when you're talking about markets down for the fourth straight session at fresh 7-week lows. Not only that, while the benchmark indices did fall, you saw much bigger fall coming across as far as the broader end of the markets are concerned. So the mid-cap index, the small-cap index were the ones that bore the majority of the selling pressure. And remember, the advanced decline ratio yesterday was very, very weak, almost at 1:10. Which were the sectors that bore the brunt of the selling pressure? IT on the back of the development of the DeepSeek, and pharma stocks, especially pharma companies that are present in ARV tenders. Those were the entire sectors that saw significant selling pressure. Today, mixed cues coming in as far as Asian markets are concerned. GIFT Nifty actually indicating a bit of a gap up start, but it'll be interesting to see whether that can sustain once market opens.
Okay, absolutely. We'll watch out for if this green that we're seeing in Nifty implied open is actually going to be sustaining. But let's move on and get you which are the important stocks that you should be keeping on your radar this morning. We have Hormaz joining in with us for that. Good morning, Hormaz.
Morning, Vinny. And the numbers that I'm going to read out to you is more of a case of a reaction to already subdued expectations. Coal India is one of them. If you look at the numbers in comparison to estimates, they were way above their estimates. But on a year-on-year basis, every metric is in the red. Same is the case for Tata Steel. There was an expectation of a 550 crore rupee loss, ended up coming in with a profit. The exceptional losses in the base quarter were lower, but when you compare it on a year-on-year basis, the revenue, EBITDA and margins were all down when you compare it to the base quarter. Federal Bank's net profit was below expectations. Net interest income was in line. Asset quality improved on a sequential basis, although slippages saw a marginal increase from the previous quarter. Same is the case for IGL, right? It was already factored in considering the APM gas allocation cut that the numbers would be impacted. The company also mentioned the same. The parameters on a year-on-year basis are down, but the numbers in comparison to already subdued expectations were better than estimated. 361 WAM will also be reacting to results, but the bigger news is that they'll be acquiring 100% stake in BNK Securities, one of the oldest brokerages, and that will be done for a cash consideration of 600 crores plus an allotment of equity shares as well of the company. Azad Engineering will be one of them. That is, received a purchase order for advanced high complex rotating airfoils for supercritical turbines from BHEL. Keep an eye out on that. DLF as well, because the company has sold 173 out of the 420 units at the super luxury project called Dalias in Gurugram, and one of each unit is costing around 80 crore rupees. And Tata Power, lastly, as the arm, Tata Power Solar has backed a contract worth 455 crores to supply solar power modules to the Maharashtra State Power Generation Company. Back to you.
Thank you so much for that. And lastly, let's go across to Sudarshan, who's here to tell us what's going to be happening in the world of F&O. Today, what are we watching out for there? Good morning, Sudarshan.
Good morning, Vinny. So it was another day of big fall. If you see the last two sessions, similar script has played out. On Friday also, Sensex and Nifty had fallen 1%, Nifty mid-cap index had fallen 3%, and similar move that we saw yesterday. But GIFT Nifty today is indicating a start with minor gains, or say start with gains of around 50 to 60 points. On the cash side, the flows, if you talk about, FIs have sold more than rupees 5,000 crore and DIs have bought more than rupees 6,600 crore. But the picture is not that grim if you look at the derivative side. FIs have sold minor sell figure of was of rupees 34 crore. They have added long positions of more than 7,000 contracts. At the same time, they have reduced short positions by nearly 31,000 contracts. And with this, FI's long exposure now increased to nearly 23%. On the client side, long exposure now stands at 70%. Also in the stock futures, if you look at, for the last 4 consecutive days, FIs have been buying. And in the last 4 sessions, they have bought more than rupees 7,000 crore. Talking about the options, 23,000 and 22,900 call have seen active additions of nearly 54 lakh shares and 28 lakh shares respectively. And on the put side, 22,600 put has seen addition of nearly 11 lakh shares. Support for Nifty is now seen somewhere around 22,750 and resistance is now at 23,000. 5 stocks that have come out of F&O ban are AB Fashion, Bandhan Bank, CanFin, Dixon, L&T Fin. Apart from these stocks, keep an eye on banking names also after RBI yesterday announced measures related to liquidity infusion.
Okay, Sudarshan, thank you so much for that. And on that note, we're going to step into a short break. But after the break, we'll come back and talk about Reserve Bank that has announced the measures to boost liquidity. And we'll get you more details on that on the other side. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now, the RBI has announced fresh measures to shore up liquidity in the system. The central bank will conduct 3 separate auctions to pump 60,000 crore rupees. The central bank has also announced a slew of measures, including a $5 billion worth of forex swaps. Lata is joining with us to explain us what these new measures mean for the economy as well.
Well, we all know that there has been a serious liquidity crunch. All of bankers, NBFCs, India Inc. are complaining. And why is it? Because the Reserve Bank has been selling dollars. Their FIs are fleeing. When you sell dollars, you pull back rupees. That is creating the liquidity deficit. So what have they done? 60,000 crores are going to be given by buying bonds. That is the meaning of OMO, open market operations. It will be done in 3 tranches of 20,000 crores each on 3 dates, Jan 20th, February 13th and Feb 20th. They're also going to give money through a repo. It's called variable rate repo, but basically a repo means you give money and then 56 days later it is reversed. The money comes back to the Reserve Bank. So for about 2 months, the bankers have the satisfaction that there is an additional 60,000 crore available to them in case there is a liquidity crunch. These crunches normally happen, March 15th when there's advance tax payment, etc. That's why they're shoring it up. And then they're going to do FX swaps, which is buy today and sell it after 6 months. It's a buy-sell swap. So when they buy the dollars, they're pushing in money. That's about $5 billion. That works out to what? 45,000 crores. Totally, it works to about 1.5 lakh crores. And that is exactly the kind of liquidity that dealers were telling us will go away from the system, because typically in Q4, there is a lot of cash withdrawal also because of harvests and things like that. All of us pull out deposits from the banks. So this actually replenishes that and the deficit created by the dollar selling by RBI. Now, the point is, when there is so much money given, only then will a rate cut take effect. If you cut rates at a time when there is no liquidity, banks can't pass it on. Now the Reserve Bank has created easy liquidity. So what is the market guessing? Oh, there must be a rate cut on February 7th. And they are also guessing maybe there will not be a CRR cut because liquidity has already been given. How will that impact markets? Bond prices will definitely rise because the Reserve Bank is going to buy bonds. And secondly, NBFCs will do well because there's easy liquidity. Banks, I'm not so sure. They will do well because the bond prices go up on their books. But when there is a rate cut, they actually see a crunch in their margins. I'm not sure about how banks will do. NBFCs will do well today.
Okay, ma'am, thank you so much for that. But on that note, let's move on. And with just a week to go for the union, less than a week to go for the union budget, the government is likely to tweak the insurance and direct tax laws in the budget. Sources have said that the new income tax law will be simplified. However, no policy changes are likely. Sapna Das is joining with us to give us details on that one. Sapna, over to you.
Well, of course, first off, we are given to understand that the insurance amendment bill is being proposed to be tabled in the upcoming budget session of the parliament. The expectation was that the government would have brought it in the previous winter session, but that could not happen. Broadly, the proposals remain as are, which is basically raising the FDI cap to 100%, issue of composite licensing, wherein both life and non-life insurers will be able to sell both sides of the policies, and agents, of course, will be able to sell policies of multiple companies and not just one insurer. Broadly, this is what it is. Interestingly enough, also given to understand that probably the direct tax law could also be tabled in the budget session, and the main focus could be in terms of not just simplification but serious compression of the words in the direct tax laws. Given to understand that the word limit could be brought down to around 2 lakh odd. This would basically translate into a 55 to 60% simpler direct tax law as of now. Also given to understand that there will be more focus on tabular depictions of income tax calculations, maybe for more visual impact. The definition of the assessment year and fiscal year, that could also undergo a change. And last but not the least, but income tax forms could also be rationalized, some of them at least. Focus is on simplification, no policy change envisaged as of now.
Thanks so much for that, Sapna. On that note, we're going to slip into a very short break, and after the break, we'll talk about what's happening in the world of commodities with Manisha Gupta, so stay tuned in. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's go across to Manisha Gupta, who's here to tell us what's happening in the world of commodities, what is crude doing this morning. Manisha, good morning.
Morning, Vinny. Thank you for that. Well, yes, I'll start with the crude oil prices first because we have seen further declines come in for this one. Overnight, it has been a 2% fall, and with this now, the WTI crude is trading at a 1-month low and the Brent is trading at a 2-week lows as well. Well, the markets are dealing with weak Chinese economic data, U.S. tariff uncertainties, and then, of course, the U.S. sanctions on Russia. The Saudi Arabia, in the meanwhile, has signaled intentions to raise oil prices for Asia. So all of that really weighing on to demand and in prices in return. I'll also talk about the metal prices, where we also are looking at a decline on the back of weak Chinese data. So when you look at copper, that fell 2% overnight. Aluminum is trading at a 2-week lows. Nickel prices have fallen to a near 4-year lows as well. And the markets also have seen pressure in precious metals. So gold and silver both fell a percentage point overnight. Gold is now off its 2-month highs. And we actually have seen money flowing into favored fixed income and some defensive equities. And it has flown out of precious metals as a safe haven as of now.
Okay, Manisha, thank you so much for that. So surely keeping an eye out on crude, the precious metals also something that one should focus on. But let's move on. And Prime Minister Narendra Modi spoke to the US President a week after Trump was sworn into office for his second term. Both sides agreed to work for global peace and security. The two leaders reaffirmed their commitment for a mutually beneficial and trusted partnership. They discussed various facets of the wide-ranging bilateral comprehensive global strategic partnership and measures to advance it, including some areas of technology, trade, investment, energy and defense. Moving on to some updates coming in on the international front and coming in from West Asia. Close to 300,000 displaced Palestinians returned to North Gaza today as Israeli troops opened the Netzarim corridor after Hamas released 6 more hostages. Additionally, President Donald Trump also floated the idea of clearing out Gaza of Palestinians and urged Jordan and Egypt to take in Palestinians. However, Trump's suggestion has faced a lot of heat and the Arab League has rejected the idea, stating this action would uproot Palestinian people from their native land. But with that, we are absolutely out of time on this edition of Power Breakfast on CNBC TV 18, leaving the Nifty implied open, seeing an uptick of around 70 points in trade. We'll keep an eye out on what happens for the Indian markets. Up next, you have Bazaar Morning Call.